It's just a really mature asset, so it takes a long time to move. But I do think that it's slowly going to inch up, take out the highs here, and then be off to the races.
Do you see the same situation for precious metals? Are they going to make the move when the Fed pivots?
Yeah, so I think my guess is we've already created or we've already have a breakout on gold, right? So if you look at this trend line here, this was your high in 2020. You had about a year and a half of consolidation, and then you finally broke out here, and now you've retraced. You've actually hit the scene of the crime, which is the retrace line. That's very normal in charts. And now you're kind of hovering here. In general, gold is think about it, gold is like the sloth, right? We know sloths move really, really slow. It's just a really mature asset, so it takes a long time to move. But I do think that it's slowly going to inch up, take out the highs here, and then be off to the races. Because again, I think slowly the markets are going to realize, investors are going to realize that inflation is not going back to 2%. The Fed has let the genie out of the bottle here. The Fed is not going to be easily able to kind of control the downward move in the economy, which likely means recession. It means fear. It means stocks aren't going to be the place to be as much anymore. And I think gold is an underinvested asset for a lot of hedge fund managers, very, very underinvested because it doesn't get them the big returns that the Fed was able to generate by printing money in stocks like Tesla and all these other names. And so you're going to see at some point a rotation into gold, which should do very, very well. And again, just look to the 1970s. If you want to see gold performing, the chart from 2020, or I should say from 2018 down here to 2020, and then this consolidation and the breakout, almost picture perfect to the 1970s into the late 70s. And gold went up 9 times, I think, in the late 70s, not 9x. I don't think it'll do that this time because, again, it's obviously a lot higher. But I do think, you could be talking about a $5,000 per price gold price by 2025.
So what you're saying is when the stock market is selling off because the Fed is tightening, investors will look towards gold because stocks aren't giving any return?
Yeah, and I think fund managers will start to recognize, in addition to that you have a new scenario where inflation is not going away, right? So everyone's kind of in the camp, all right, Fed's going to aggressively tighten. It's going to bring back inflation back to 2%. It's all going to go back to the way it was for the past 20 years. I'm not buying that. You have wage. I think one of the biggest. So it's a great thing for people to make more money, but it also has an impact on inflation. And when companies are trying to hire workers and they're not getting anyone for $12 an hour, so they have to offer $20 an hour or $25 an hour, that's massive wage inflation that then has to be passed along to consumers in the terms of higher prices. So, the business doesn't say, well, let's raise prices by 100% because we have to raise wages by 100%. What they do is they say, let's raise prices this year 10 or 15%, next year 10 or 15%. And you see this longer kind of inflationary pressure because of a rise in wages. So that's my guess, is that that's what you're going to see in terms of interest rates, inflation, and all these other things. It's going to be a longer term impact.
And we did actually just see Jerome Powell, the chairman of the Fed, make his testimony today. And he stressed, the importance of bringing down inflation. But as you mentioned, I don't see how anybody can actually think that the Fed raising rates by the amount that they have been and plan to do is actually going to bring down inflation. If you look at what happened back in the 1980s with that inflation, they had to bring rates to double digits to actually make inflation come down.
Yeah, and think about that. We have a 3.3 10-year, give or take, and look at the markets freaking out. You're seeing the housing market just screech to a halt because taking out a loan on a house now is so expensive with home prices going where they have. So there's already a major impact because of a 3% plus 10-year. I can't even imagine a 10% 10-year. But yeah, you're right. So I think oil coming down will help in general because we know oil is so pervasive. But overall, it's when you look at food, it's also the labor costs. People picking apples or this and that are going to cause those raises. And that's not, you don't see people's wages dropping back down. Like, you don't go to $20 an hour and then your boss comes back and says, well, inflation's back down, we're going to drop you back to $10 an hour. It doesn't happen that way.
Definitely. And could we, before we let you go, could we have you analyze silver for us? What do you see happening in the silver market?
Silver continues to be one of the trickier ones in the near term to analyze. And again, the overall longer term pattern is still bullish. So you have this low pivot to this high pivot. And then for the last 2+ years, we've just chopped sideways. We're at the lower range. The reason why it's a little trickier is because not only is it a store of safety, which is great, like it's a goldish type play, but it's also industrial, right? So if you see a massive slowdown in the global economy, there's less demand for silver, and it kind of offsets that security of being in something like a gold. So I think overall, inflation, again, like I said, it's not going away. It may come down. I do think it'll come down, but it's not going away. So silver will perform over the next multiple years. But in the near term, to be honest, I'm not sure if it could dip down here. This would be a major support around $19 on silver. One of the things I will look for here is, let me just draw this line here. This would be a big breakout line. So you can see you can kind of connect this high through here to here. So if silver can kind of get over 26, then it starts to really look like it might get that big breakout. So right now, really, if you look at this, and I have a bunch of lines in here, and I don't mean to confuse anyone about anything, but really the biggest thing on silver you need to recognize is that for now, since 2020, you've been just chopping up and down and up and down. Ultimately, this is a bullish macro pattern. So macro means longer term. So it's going to go longer term to the upside. But again, could it go down from 21 where it is now to 19? Yeah, it could.
And any thoughts on how all these markets will be impacted by the strength in the US dollar?
Yeah, so I think that you have to recognize that. And by the way, that's a great point, too, is because just going back to our discussion on gold, right? So if you look at the US dollar, I mean, look at the run up on the dollar that we've had, and then also point that in the direction of gold, right? So I know, Elijah, you know that usually gold moves inversely to the price of the dollar, right? I mean, if the dollar is down, gold goes up and vice versa. So the fact that gold has held up as well as it has in this massive move up on the dollar is actually a very, very bullish thing for the metal itself. And in regards to the dollar, I'm actually bearish now on the dollar. If you look at this chart going back to 2015, you have a pretty clear trend line right up here, and we're right at the high end of that. Now you can see pierced over here a little bit, but what this tells me is that it's very likely the dollar is in a topping area here, and we might see a pullback, which again for me says buy gold, maybe silver. Commodities probably will outperform here, especially if the dollar starts to drop.